Welcome to our daily Forex market analysis, and this is for trading on May the 28th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll start off by taking a look at our calendar here. So in terms of the data that came out today, there was a mixed bunch. Essentially, and then coming up this evening, we have we had Bank of Canada, we have Reserve Bank of New Zealand, Governor Orr speaking. So that's in terms of the message here, nothing has really changed. They're basically repeating what was said previously. So I'm not expecting any kind of wild moves here. So basically, the central banks are supporting the markets as the support is needed. And then let's take a look at what's coming up here on Wednesday. A fairly light day in terms of our news data releases here. We do have ECB President Lagarde speaking. So that's in the morning here in the European session. At this point, I wouldn't expect too much of a change here. Again, commentary is the most important part, looking at what they are saying, any kind of negative any sort of negative, I would say, comments in regards to the growth forecast would be something that we have to pay attention to. And then overall, ECB is putting a big 500 billion proposed package together. So all of that is likely to be positive. So markets like that right now, so not expecting much of a change there. And in terms of our US data here, we do have a Richmond Manufacturing Index. It is expected to be better than the previous month here. So we'll see if that does come in better than expected. That would be good for the stock markets, and we're likely to see the stock markets go up. And then we have business confidence numbers here for New Zealand. And if the numbers come in better than they were previously, that would be positive. Now, we are seeing a lot of these business confidence, consumer confidence numbers are coming in better than expected, because as the different countries open up around the world, everybody is more positive in terms of spending money, in terms of going back to work, the businesses opening up. Overall, right now, we are seeing a lot of positive sentiment in the market. So yesterday, as well as the markets opened up, that positive sentiment, risk sentiment came into play, and we saw everything take off in the risk on mode. So now, as we have seen, all of this is really two driving factors behind this. One, or I should say three. The first one is the trials here. So positive news in regards to the vaccine. We did take a look at, there was a company that announced the phase 1 trials for the vaccine, human trials, excuse me, which is a positive sign to the market like that. And then secondly, we have a lot of optimism right now because of economies opening up around the world. So that seems to be the constant theme right now. And till we are fully open, we're likely to see this type of a positive sentiment, because as people are able to go out and spend money and businesses are opening up, that is positive for the businesses and hence for the stock market. And also, all the different central banks around the world have been pumping money into the economy. So that is also a positive sign. The more money is circulating in terms of exchanging hands, the better it is for the economic growth here. So that's what we have been seeing here. Now, on the negative front, though, one of the things that the market has ignored a fair bit are the tensions with US and China. So we have seen last week, China announced that they're going to implement a new security regulation or law in Hong Kong. And essentially, China has been condemned from a lot of different countries around the world on this action. They're not backing down, though. So US today announced that they are going to put some sanctions on China against some Chinese Chinese officials as well as Chinese companies. And at this point, we don't know what those sanctions will be. So we'll see how the market reacts to that. We are starting to see a little bit more, a bit more of a comments in that regard. So this is something that we'll have to keep an eye on. So right now, it's the stock markets that are basically where we are seeing the sentiment kind of come and go. Right now, they are fully into risk on mode. But if we start hearing more about these geopolitical concerns between the US and China, China and Hong Kong, and we start to see more protests in Hong Kong, that will be negative, and we could see that sentiment shift. Even today, if you take a look at, quick peek at the charts here, we see that the US markets did actually close to the downside, which means we may see a turn in sentiment. So if the risk sentiment turns in the stock market, it is going to turn in the Forex as well, because both of these are tied. When the stock market goes up, we see US dollar has dropped because of its safe haven. So safe haven assets drop, and we see risk currencies go up. So we have seen Euro, Pound, Aussie, New Zealand dollar, all the commodity currencies tend to go up with the stock market, and they tend to drop when the stock market drops. So everything was positive, but keep an eye on the stock market. As we saw, the Nasdaq did close to the downside, and this was essentially later in the day when we heard those comments from White House in regards to potential sanctions against Chinese officials and Chinese companies. So at this point, we'll just have to wait and see in regards to the risk sentiment. So let's take a look at technicals, what's going on. We'll start off with euro dollar here. A big move to the upside here in euro. Now, as we can see, price is into resistance, so we do need to be careful here. This is where, this is the fourth time price is testing this level. We saw that it did come to test this level a few days ago here and bounced off of that. Right now, it is looking quite positive. So we could see a break to the upside, especially if the risk on sentiment continues in the market like we saw today. I would be careful here though, because we are into solid resistance. So bias for now is bullish, but the caution will be, because we are into resistance, if it doesn't go through, I will look for a turnaround. So watch out for that, either into, so basically into the 1.10 area is what I'm looking at. So if it holds below 1.10, we are looking for a turn. Otherwise, we are looking for a continuation. First target is 1.1050. And then above that, we are looking at 1.1100. So for now, bias is bullish, just with caution. Pound dollar here, this one as well, a big move to the upside, as we can see. So here as well, a bias is bullish, but again, I would be cautious here if, as we can see here, price is into resistance. And if we were to zoom out here, so this is where price is, and as we can see, it has reacted at this level several times before it broke through and then came back down. So right now it does look bullish. However, it is into resistance. So again, bias is bullish, but with caution, because if it's not able to break through this resistance, we could see this one turn around as well. One of the things that is driving British pound higher is also the Brexit negotiations. So there were some comments in regards to Brexit negotiations proceeding better, and UK actually showing some flexibility on one of the areas that they had stuck firmly to, which is in regards to the fisheries. So if the trade negotiations continue positively in regards to Brexit, that will be good for British pound. So let's say if we hear comments about them falling apart again, that will be negative for the pound and we could see a reversal. So right now bias is bullish with caution though. So in this case, should we see a break above 1.2360, next target here is 1.2440, and then above that we're looking at 1.2470. So for now, a bias is bullish here for pound. Aussie dollar here, it finally broke through the resistance level here, and as we can see, price has gone higher. We do have a bullish candle close for all of these crosses, especially for Aussie here. If the risk sentiment turns, Aussie is likely to drop. But as we can see, this has been in basically moving along with the stock markets. As the stock markets have gone up, Australian dollar has also gone up. So right now, bias is bullish, but because we are into resistance, we have to be cautious here. If the price breaks through the resistance at 0.6680, then I'm looking for a further move to the upside. Next target is 0.6750. So in this case, the move could be, we may see a decline here. We may see price retest the previous high here at 0.6620, and if it holds above, then I will look for a further move to the downside. But if it breaks through this swing high, this is an important support resistance level. If it breaks down here, then we are likely to see this move get filled again. So for now, bias is bullish, but with caution here as well. Again, this is going to be very much tied to the stock market. New Zealand dollar here, this one's looking bullish as well. As we can see, price is into resistance at 0.6220. So for this one as well, bias is bullish with caution though, because again, this one is tied strictly to our stock market here. So if we see price hold above 0.6165, then we're likely to see a move higher. But should it drop through this resistance, but because this was a major resistance level that price had to go through to go higher, then we're likely to see, again, just like Aussie, we could see price reverse that move. So for now, bias is bullish with caution though. Dollar CAD here, dollar CAD as well broke through this support. And this was basically a couple things that were driving this. One was risk on environment in the stock market. Second one was the price of oil. Oil went up today, and that's why we have seen Canadian dollar get stronger. And of course, US dollar was weak, and as a result of that, a big drop here. And in this case, I will look for a bit of a pullback here into 1.3850, and if it holds below, then essentially we're looking for price to drop further. So again, risk will play a big role in this, so keep that in mind. But for now, bias is bearish, and next target here is 1.3730, and then below that we're looking at 1.3680. So bias is bearish, but with caution. Silver here, silver is looking bearish. We have a bearish pin bar here, and in this case we could see a drop in terms of our target here for silvers. The first target is 16.88, then 16.70. So bias here is bearish for silver. Gold here, gold dropped. Gold is starting to act, and silver as well. They're both starting to act as safe haven assets here. And with the markets going up, they did drop today. Now, bias is bearish here, and I will look for a pullback potentially into 17-ish area. And if it holds above, we're looking for a drop. Now, the pullback could go a little bit higher into 1720. And again, if it holds below, then next target would be to the downside here. 1690 is the next target. So bearish bias here for gold. Oil here, oil has been holding within this range here. It did go up to test the high here And so far it's holding. Right now, overall, still remaining bullish here. As we can see, it's holding above the support level here. But I'm a little bit biased and neutral here because at this point it hasn't really, it's just going sideways. So bias is neutral for now. And if it breaks through this 34.80 or 35 level, then I'm looking for 36.50 and 38.50. But if it holds below today's high, chances are very high that we are going to see a drop here. So watch out for that. Neutral bias for oil. Copper here, we have a bearish pin bar here for copper. So looking for a drop. First target is 2.34, and then second target is 2.33. So bias is bearish for copper. Bitcoin here, Bitcoin's been trading in this range. It's tried to break through the support, hasn't really managed. Bias here is neutral. We could get another retest of the low here, and if it holds, then we are looking for price to essentially go back into the range here. But if it manages to go through here, then our next target would be 8380. But for now, bias is neutral for Bitcoin. S&P 500, we do have a bearish pin bar here for S&P 500 at this point. I would say bearish based on the technicals, but risk sentiment here is very, very important. If we see that price holds here, or sorry, I should say, if it doesn't hold above the support level of 3,000, then we can see a risk reversal here. Now, there have been comments going back and forth, and there are there are concerns, geopolitical concerns, and this is in regards to China putting new security regulations and law in place for Hong Kong, and we are basically going to get more unrest in Hong Kong, more protests like we saw previously. So US has basically condemned the actions from China in this regard, but right now, there are no concrete actions that have been taken. They have talked about different sanctions on Chinese companies and Chinese officials, but there is no concrete plan in place yet. However, there were comments from White House in regards to that, and if we start to hear more of that, so President Trump essentially said that we will find out more about exactly what those sanctions will be by the end of the week. So if you start to hear more comments in that regard, the risk sentiment could turn. So watch out for that. So in this case, 2980 is a good level to watch here. And if price holds above 2980, then we could see a further move to the upside. But based on this is looking bearish here. We have a bearish pin bar. Price did go above 30.20, but it hasn't managed to hold. So watch out for that. Another thing to keep in mind again would be that there were some comments, or there were some articles floating around the internet, basically comparing the move that we have seen here to the move back in 2008 after the financial crisis. So we had a similar situation in where we saw a lot of central banks pumping money into the system, and as a result of that, stock markets had gone up, and so the stock market now is back into the 200-day moving average, and back when that happened in 2008, price actually dropped from there. So we could see a similar scenario. So I would be careful with this. So the bias here is more neutral to bearish for now for S&P 500. We just need to keep an eye on the risk sentiment, and it does. And it can flip in the European session, so keep an eye on that. For now, neutral to bearish for S&P 500. NASDAQ here, we do see that NASDAQ went up all the way into 9,600, so almost into the highs here, and it has turned around from there. We do have a railroad tracks bearish formation here, so bias is bearish. And next target here, now we do have to keep in mind price is into, so there is a support level right at 93.50, and if price is not able to break through that level, it can turn around, so watch out for that. But once it crosses that level, then essentially we're looking at 92.35 as the target here. So bias here is bearish for NASDAQ. And if the stock markets turn, then keep an eye on those yen crosses as well, because those will be likely to turn as well. Okay, Dow Jones here. Dow Jones is almost into resistance here, as we can see. Now price has slightly filled this gap here. At this point, it has broken through the resistance level here. As we can see, it has closed above the resistance level. But again, if the risk sentiment shifts, this is likely to drop as well. So I am neutral on this, even though we do have that breakout candle. If price goes through this support level, so the resistance turns into support. So first of all, if it holds above this level, 24,865, then I'm looking for price to go higher. On the flip side though, if it goes through it, we could see it come back into that range once again. So at this point, I am neutral. Once it crosses below 24,865, then the next target we're looking at here would be 24,500 and then 24,150. So neutral bias here for Dow Jones. DAX here, DAX also closed to the downside. It did go up for the day, and as we had marked here, it went into our resistance and it has closed slightly to the downside here. Not a huge candle, so keep an eye on it. Bias for now is bearish. Next target here is 11,250. So bearish bias for DAX as well. FTSE here. FTSE is another one that did go up quite a bit here, and then it has closed in the negative territory. So now I will look for price to come back towards the bottom of the range. So it tried to break out, came back into the range, and next target here is, or I should say first target is 6,000, and then next target would be 58.80. So bias is bearish for FTSE here. And last but not least here, we have Nikkei. Nikkei broke through here, and it is almost into the top of this little range that it had been trading in previously. It does look bullish at this point. So what I would look for here would be a potential pullback into this 21,000. And if it holds above this 21,000, then we're likely to see a continuation to the upside here. So bias here is bullish for Nikkei. And all of these tend to be, all the stock markets tend to sort of, they tend to move in the same direction based on the risk sentiment. So if they start to turn positive again, then I would expect all of them to kind of go in lockstep. Some of them may not be as strong as the others, but right now risk sentiment is key. Today we saw positive risk sentiment in the market, and if that's the case tomorrow as well, again, watch out because it is likely to go higher. But if it turns and we start to see that prices starting to move through our support levels, then we are definitely going into the negative risk sentiment. Any of these talks about sanctions and so forth are likely to be negative for the market. So just keep an eye here. I am expecting volatility in the market, just like we had volatility today. And when there is so much volatility in the market, things can really get carried away. Price can get carried away. So just be aware of that. All right, so that's it for today. Have a wonderful trading day, and I'll be back again tomorrow. Bye for now.